The crypto market is red yet again, and the tokens that are losing the most are the tokens that used to be the high flyers just a few weeks ago. It's the AI agents, it's the pump.fun ecosystem, it's the meme coins. The question is, does it make sense to continue holding, potentially even buy more, or is this the end of the bull market? We're going to look at on-chain data most people aren't considering. We're going to dive deep into things that might explain what's going on. Now here's the category overview. So this is CoinGecko, and it shows how did various categories within crypto perform in the last week. At the top is the worst performer, which is artificial intelligence memes. The category is directly followed by the pump.fun ecosystem. So this is a launchpad on Solana for meme coins. Then we've got AI agent launchpad. So a lot of this is the base ecosystem with virtual protocol. And again, AI framework, AI agents, all the high flyers in the last weeks are now getting sold off the most. Now we're going to look at two time frames here. Short term, we might be oversold. Medium term, it's a bit different. Have a look at this. This is the Solana dominance. So how much of all of crypto is into Solana? And it seems like in the last 4 years, we were trading in somewhat of a range, with the top being close to 4% and the bottom being close to 0.5%. And currently, we are rather at the lower end of the short-term trading range. Now, those movements do matter. A rally up to the top is a gain of 35% in the Solana token itself. And since Solana is one of the largest cryptocurrencies, the tokens that are traded on Solana would go up much more than just 30-something% in case we do see a rally. What is nice about this trading range is that we can set a potential stop loss quite clearly. As in, it might make sense to cut losses in case we go down another 13% in Solana versus the rest of the crypto market. And if that doesn't happen, we just take the profit. But overall, of course, there is a lot of volatility. Things can turn sour quite massively. This was a drop of 84% of Solana relative to all the rest of crypto. This is when FTX collapsed. Now, if you're watching this channel, there's a good chance that you've also been trading meme coins. And what's interesting is that Bitcoin tends to outperform everything else, but have a look at how these capital flows move in the meme coin index. So that's this line in purple. We see money flowing in and then flowing out again, then flowing in, then out again. It seems like there were a few deep pockets that bought up the supply of specific meme coins, generating a lot of attention from retail. Retail then bought in high, and then those deep pockets, they simply removed their liquidity. We have seen 4 such waves. Currently, we are obviously not in such a wave, right? The meme coins are getting hammered. And it looks like a lot of that purchasing didn't even necessarily just happen on the spot market. It seems like the perpetual futures market, so the levered bets on the price, they fueled the meme coin rally. Because when you buy bets on the price on a centralized exchange on a meme coin, then a centralized exchange has to hedge itself on the spot market. But it seems like it's the perps, the open interest in the perps, especially on meme coins, that push the prices up. Now, I've already talked about a potential short-term turnaround for Solana, right? This is the Solana dominance. But there's also a similar effect in the others dominance. Now, what is the others dominance? The others dominance shows what's the market cap of all the altcoins that are not in the top 10. So all these smaller altcoins. How much market cap do those smaller altcoins have relative to all of crypto? And those two lines have the same shape, and the dominance tends to be moving between those two lines, and currently we are very low. So this would again indicate a potential turnaround. Now, I'm not sure if that turnaround will happen, right? I'm simply just showing the data. It's very much worth paying close attention to this chart. You can simply go to tradingview.com and then enter others.d and you get the same chart. And then we can just have a look. Will this actually fall below 8.25% or not? If it does, then this would be, of course, not great for crypto. Now, here's the issue. Ethereum is moving a lot of altcoins as well. And Ethereum is getting sold off constantly. Ethereum is getting unstaked. Ethereum doesn't see that much demand by the ETF, and Ethereum underperforms everything else. And unfortunately, there seems to not yet be a bottom in ETH. Have a look at this. This is the Ethereum dominance, and it moves between 21% and maybe 7%. Sometimes Ethereum gets more expensive, sometimes it gets cheaper. Since the move from proof of work to proof of stake, we constantly underperformed, and we are not yet very close to the bottom, right? If Ethereum continues underperforming the rest of crypto by another 30%, then of course that's not great for the alts as well. A lot of altcoins are directly linked to Ethereum via liquidity pools. Now, crypto prices are moved by two things. First of all, the people that swap in and out of stablecoins, right? When you've got a lot of stablecoins, you might be buying an altcoin, then you sell the altcoin again, you move back into stablecoins. Well, there's the swapping activity, but on the other hand, there's also the movement from traditional finance into the crypto space and vice versa, right? Out of the crypto space as well. And the second effect we can see over here, this is the stablecoin market cap. So how much money is flowing from traditional finance into stablecoins whenever somebody is buying stables or depositing fiat in a stablecoin issuer's account? This is going up. So the market was contracting over here with the Terra Luna collapse and subsequently the FTX collapse. It then started recovering at the beginning of October of 2023, and since then we are going up. However, unfortunately, in the last few days we have not seen any more additional money flowing into crypto. Now, we've seen similar sideways movements in the past. It is important to continue monitoring this as well. If we go sideways for too long, then this could potentially have a bad effect, because DeFi protocols are only sustainable as they give nice returns, right, when the risk is really compensated. And so the time is ticking. If we don't see any more money flowing in, then at least historically speaking, the end of April would be a potential turnaround, right? When money is flowing again out of crypto, that is not good, right? Then it's pretty much impossible for crypto prices to go up unless people start to aggressively deploy the stablecoins they've got on the sides. I believe we are very close to a potential medium-term decision, and that's based on the 120-day simple moving average. So I've made back tests of various moving averages all the way from the 2-day to the 200-day. I've back tested this with various time windows for Bitcoin, and we found out that the 120-day simple moving average is the best historically speaking. And I'm using this moving average already for several years, and it has served me very well. I entered low to then afterwards sell high again. So I want to be out of the market when the price is below the moving average. We want to be in the market when the price is above. And currently we are very close to that moving average. It's another metric I monitor very, very closely, where we might see a potential bearish turnaround. So the 120-day SMA is currently at 92,830. If you were to close a day below that moving average, and that's not much of a drop, right? Only 5% or so from here, then things could very much turn worse. At least that's what happened in the past when the price fell below that moving average. It's of course not a perfect indicator. We do have our fake outs where you go above and then below again, or here below and then above. It's by no means perfect, but it is a very good long-term trend following strategy. It's at least the best among the moving averages. If you're following a moving average, don't take the 200-day or the 100-day or the 50-day. Take the 120. It's really what tends to work the best for BTC. And so interestingly enough, the short-term holder average cost base is also very close to where currently the 120-day SMA is. And to a degree, we see something similar to what we've just seen a few years ago. Have a look at 2021. We first had our nice rally. We went close to the higher band of the short-term realized price. Then we went below, and this is when we got another sucker rally to then enter the bear market. We've now got something very similar. We touched the upper band, we got below again, now we've got our quote-unquote sucker rally. Of course, the sucker rally actually brought us to a higher level than we were before, right, in both cases. And now we get back to the short-term realized price yet one more time. So this is not a pretty picture, right? This would tell us we should rather exit. But again, we aren't yet below that realized price. We are close to it. We are not yet below. It simply just shows us that it's very important to look very closely what's going on now. There's another data point that I don't like that much, and that's how much is currently held by the short-term holders. Whenever there's a lot of speculation in crypto, when a lot of Bitcoin is held by the short-term holders, that means that the market is heated. When nobody is interested in Bitcoin, when only the long-term holders hold Bitcoin, that's where we want want to buy. And have a look at this. This is the total supply held by the short-term holders. So that's the orange line. And when this is going up, everything is great. The market is heating up. The price is going up. Whenever the short-term holders are coming down, that's potentially when the price has a hard time climbing again. And now we are pretty high on the short-term holding again. We are not as high compared to 2021, but we are definitely at comparatively elevated levels, and we might be turning around, right? This might flip over here. So again, another metric that I believe will tell us very soon where we are headed in the next weeks. And so short term, there might be an opportunity potentially in Solana and in some altcoins because we are oversold. Medium term, it's not yet clear. We're very close to a potential decision maker based on various indicators. And so I will, of course, continue watching those charts. I will continue to make updates and share what I think about them. If you don't want to miss those videos, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. I also have a premium membership. This is where I share what I personally do in this market. I personally short a lot of altcoins, especially the very weak altcoins that tend to have high token inflation. There are some alts that tend to continuously underperform Bitcoin. We can make pretty constant alpha by betting on falling prices of those altcoins. So that's something that you're interested in. Feel free to check it out. It's down below, thebitcoinstrategy.com. See you again in YouTube or potentially in premium. Cheers.